The following is a Silver Bullion television audiocast. Hello everyone and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Today we have with us Mr. Jason Hamlin, the founder of goldstockbull.com, which provides research information for investors in the precious metals, cryptocurrencies, energy, and agricultural markets. Jason previously worked in data analytics for the world's largest research firm, consulting to Fortune 500 companies. Together with the Gold Stock Bull, he also launched the Contrarian Report newsletter. He started recommending Bitcoin to subscribers of the newsletter when it was around $100 and Ethereum under $10. Jason is a cycles investor with a contrarian eye for identifying undervalued assets. Jason believes in honest money, limited government, and decentralization of power, and enjoys studying alternative economic models. Jason's work appears on Kitco, Seeking Alpha, Yahoo News, Mining.com, and other publications. Jason is a regular keynote speaker at investment conferences throughout North America, and we are delighted to have him here today as our guest. Good day, Jason, and welcome to SBTV.
Thanks for having me.
Thank you for being here, Jason. First topic, gold. Let's begin with your views on gold and silver. 2017 was a great year for gold as it went up by about 12% or so, but it was unable to stay at that $1,400 price per ounce level, and it's been somewhat sideways for a couple years now. What do you think were the main reasons for such a growth of gold price last year?
One of the probably the biggest contributing factor was the dollar sliding, which was long overdue. It tried to break up, hit resistance, and fell pretty considerably over the last year or two. So that's helped to give gold a little bit of a rebound. But I still view gold and silver as being very undervalued relative to just about everything. There's this everything bubble concept that the Fed and central planners have essentially inflated multiple bubbles at once to very insane levels.
Yes.
So everything from stocks to bonds to real estate. And to me, precious metals are undervalued against all of those things, and especially including the USD index. Given the drop that we've seen in the dollar, I would have expected gold and silver to have risen farther and faster by now, and they haven't. So I think it's only a matter of time before we see a significant breakout. And this type of sort of consolidation that we've seen is actually quite healthy for the long-term sustainability of the market. And I think it sets us up for an even more powerful breakout once that does happen.
Do you think we're now seeing the early stages of a new bull market?
I think we're close to approaching it. So we've been patiently awaiting a breakout above 1365 gold, which the 2018 high, and then finally for it to eclipse 1377, which is the 2016 high, to turn bullish. And so far, it's tried to break above that resistance multiple times in recent months and continues to fall back. So we've sort of been in a waiting pattern here, but I do think that we're very close, and there's a number of catalysts on the horizon that I think will push gold through that resistance. And gold's still 30% below the 2011 highs, and silver is about 65% below. So there's a long way to go just to reach the levels that we were in 2011. And we see a similar thing with mining stocks. They're about 65% below their 2011 highs, similar to silver. And if you look at the junior mining space, which is where we do a lot of our research, they're 80 to 85% below highs. So if we do get this breakout and a rebound in prices, which I expect to happen by the end of the year, and with everything that's happening now, we could see this even sooner, within weeks. Then I think we're going to see a really powerful move to the upside because it's sort of long overdue. It's almost like a coiled spring in essence, if you think of it like that. And it's just kind of been building up. And eventually we're going to get a huge move to the upside. So we have a number of we advocate owning both physical metals and mining stocks. And so we have a number of core positions now, and we're kind of just waiting for that technical breakout to increase exposure and get further along on our positions.
Besides that coiled spring that you mentioned, from your research, are there any other reasons that would cause you to expect the prices to rise this year?
Sure. Well, there's a number of things happening, right at this moment. The trade wars, escalating trade wars are obviously a big thing that's been supportive of prices lately. So we have this sort of tit for tat escalation and tariffs going on between the United States and China. And, it started at 50 billion, I think, in the first week. And now there's been threats to raise it up to 150 billion on goods, and on each side. So you're potentially talking about 300 billion tariffs on $300 billion worth of trade that we didn't see just last year. So you have that happening. Then there's a lot of geopolitical tension. Obviously, I think it was just today or yesterday, President Trump is threatening to lob missiles into Syria over some of the, alleged gas attacks that are taking place there. And, there's the whole other component of this is obviously that Russia is now active in Syria, has multiple bases in Syria, and they replied to Trump's comments or Trump's tweets, as he likes to do, that they will shoot down any attempts to lob missiles into Syria, and even said that they will go after the source of the missiles and counterattack, essentially. So this is generating a lot of safe haven buying and safe haven demand, and that's supportive of gold and silver prices in the near term.
Yeah, I think excuse me. Lately, with gold and silver, probably for 5 years or a decade or more, whenever news like this would come up, we'd barely see it move, and so this is quite a surprise that it's actually moving on the news that's coming out of the Middle East.
Yeah, well, I think this is a catalyst, but I also think there's probably a lot of underlying demand. I don't think we've seen the move that we should have from the dollar decline. There's also a lot of sort of tension and nerves in the markets. People are starting to realize that the stock market and equity valuations may have run too far too fast. And we've seen some, really intense volatility lately and sharp pullbacks, some of the biggest daily pullbacks in years. So if our analysis of that is correct and the stock market is due for a major correction, again, that's another thing that's supportive of precious metal prices as people kind of flee out of these risk-on assets and look for assets that do well when there's panic in the markets, and also assets that are undervalued right now. And as you look across different asset classes, there really aren't many things that are undervalued because of Federal Reserve policies, all of the inflation sort of stimulus programs and quantitative easing and all of that in the markets. So if value investors are seeking a place to put their money that doesn't look like it's become overbought and overvalued, then I think precious metals are going to benefit from that. And because gold and silver are such small markets, relative to stocks or bonds, it doesn't take a lot of that capital flowing out of those assets into precious metals to really move the price higher. And again, that's another reason that I think we could see, not just a gradual move higher from here, but a significant breakout.
Okay. Yeah, those Federal Reserve policies, do you think they've unintentionally or intentionally manipulated the market somewhat, or even gold and silver prices?
I'm sure there's lots of manipulation taking place, and there's probably lots of unintended consequences to the policies that they enact. So lowering interest rates to near zero and bailing out the banks and pumping all this liquidity into the market, that was necessary, I think, to prevent a much worse economic collapse than we saw in 2008, 2009. So I think their hand was kind of forced, and that was really all they could do to prevent the banks from collapsing and a lot of bigger things from happening and sort of keep the markets afloat. But yeah, there are unintended consequences of doing that. It stops the pain in the near term, but it creates this longer term problem. And I think that's kind of where we are now. I think equity valuation certainly, I mean, it's triple, quadrupled from the low. So you really don't usually see it bounce back quite that fast, and it wouldn't have absent this sort of artificial stimulus from the Fed. So prices are manipulated in precious metals. Certainly, I think that's no longer conspiracy theory. There have been indictments and fines, and you don't tend to get a lot of people going to jail, but they want to point the finger on some low-level trader and say, oh, it was all his fault, sort of scapegoat kind of thing. But that certainly, if there's a way for them to make money off these trades and manipulate the markets, they will. And of course, I think they hate, Wall Street financial sector hates precious metals because they can't make a lot of money off of it. They can't make a lot of fees off of it, and people can hold the metals in their possession. And again, that's something that they don't like. They want to keep the funds in the system, in their control, and be able to churn and make fees off of it. So I think they want to dissuade people from investing in precious metals any way they can. But to me, it's one of the most attractive asset classes where you can be invested. And at this particular time, I think it's more important than ever to have your portfolio hedged and have increased exposure to precious metals. And then there's also the domestic stuff that's going on at home, with President Trump. And I think that increases the likelihood that he wants to create a distraction by starting new wars. And I think, unfortunately, that may be the direction that we're headed. But it also just sort of diminishes faith in the government. And anytime you have that kind of political uncertainty, you tend to get a rise in safe haven assets like precious metals. And again, as I mentioned, to me, most other asset classes are in bubble territory. So it's one of the few, not only safe places you can invest, but sort of value areas you can invest where prices are still, like I said, for gold, 30% below the highs, 65% for silver, and up to 85% for mining stocks. So if they get a rebound, as I expect to happen, lots of upside for investors.
You mentioned asset classes such as gold and silver. Let's talk a little bit about cryptocurrencies. You started recommending Bitcoin to your subscribers in your newsletter when it was around, I believe, $100 USD. Ethereum was around $10 USD. How did you get started with cryptos, and what was the potential that you saw that made you recommend Bitcoin at that early stage?
Yeah, I don't remember the exact article that I read, but just in the course of my research for the newsletter, I came across Bitcoin and cryptocurrencies. I think if you're in the precious metal space, if you have sort of a libertarian or an anarchist mindset, in your regular reading, you would probably have come across it in those early days. And I did, and it just seemed like an amazing concept to me. Like I took interest in it right away. Like here's a free market form of money, and it's limited in quantity. Nobody owns it. It's decentralized. What's the potential here? And it was kind of, not that I saw the full potential in the early days, but it certainly piqued my interest enough to put some money into it and to start talking about it in my newsletter. And it rocketed up to $1,100, and then it crashed and didn't do anything for a couple of years, I believe, a year and a half or so. So I almost forgot about it for the longest time, and didn't think much. And then all of a sudden, Bitcoin was in the news. So you go back and look at your wallet, your crypto wallet, and it's pretty amazed by what had happened and the fact that I hadn't paid attention during that time. And of course, it's been all higher since then. So, we went all the way up towards 20,000, and we've had this huge correction back to just under 6,000. I think we're around 6,800 right now. So it's an incredibly volatile sector, and not for the faint of heart, but I'm a long-term believer in not only in blockchain technology, because some people like to separate that out and say, hey, that's the real future and Bitcoin's nothing. But I actually believe in Bitcoin itself, the protocol, and the value in it as not only as a store of value, which it's proving to be despite the volatility, but also as money, as a better form of money than anything else that we've used to date because of its ability to be transferred quickly and cheaply across borders anywhere around the globe, and to not be controlled by any central government or banking entity, and also to, have a limited quantity so it doesn't get inflated away in value over time, which is something that's, certain with fiat currencies. If you're just holding dollars, they're definitely going to lose value over time.
Yeah,
So
right.
all of these sort of qualities and characteristics of Bitcoin are what have attracted me to it initially. And then with all of the altcoins coming out, there's just been so much innovation that's also interesting to see. And from my perspective, it's probably one of the biggest technological innovations, since the internet itself, just in terms of what it can do, how it can make business more efficient and cost effective, and make all of our lives better in multiple ways. And there's all kinds of examples of that, but one that always comes to mind is people in countries with high inflation rates, right? Where there a lot of poverty, there's a lot of there's people dying because they can't afford basic necessities they need to live, because by the time they get their paycheck, it's devalued so fast because of inflation that there's not much left that they can buy. So in those countries, Venezuela is one of them, but there's several. What people have been doing is, as soon as they get the funds, the fiat government money, they instantly convert it into Bitcoin or other crypto, and that holds its value typically over time, or, as we've seen, increases in value a lot. So you're literally seeing it in a use case here, being able to save the lives of families and countries that are facing these kinds of economic conditions.
Yeah, to add on to that, a couple years ago when India was going through their bit of their financial restructuring, we had seen a lot of residents in Singapore who have family back home in India. They were using Bitcoin to transfer funds back to their family.
Yeah, it's amazing what it can do, and I think we're just sort of scratching the surface. I mean, the big picture thing for me is, I think it has the potential to decentralize power and decentralize wealth and resources around the globe. And that is a good thing, because you don't want power and wealth and resources concentrated in the hands of a few. When that happens, the general well-being of the global population, of everyone, tends to suffer. Everyone except for that, fraction of a percent that concentrates the wealth. So it has the potential to do a lot of good in the world. And that's one of the reasons, beyond the investment returns, which I continue to expect to outperform other asset classes. It's sort of a moral investment, a philosophical investment, if you will, from my perspective as well.
Yeah, I'm totally on board with you there. Late last year, 2017, Bitcoin was chugging along until right around Christmas time, and it was sort of like the Grinch that stole Christmas for a lot of people. And we saw it fall, and it still struggling to come up. But what do you think was the reason for that subsequent fall?
Sure, there are a number of reasons. First off, it went too high too fast. I mean, anytime you see that kind of exponential growth throughout history in any assets, you're going to get a correction. And so a lot of new speculative money rushed into it. You had CNBC talking about it every day, and Jim Cramer, and
Yes.
just the average guy on the street, your taxi driver, as people like to say a lot, or whatever. All of a sudden, everybody had something to say about cryptocurrency, had an opinion, or was an expert on it, and they're telling you what altcoins to invest in and all of these things. And that's typically a sign that you've reached some type of interim top. And so that was one reason that it came down. You have to get that speculative frenzy, all of that those funds need to come back out of the market and get back down to the long-term holders that don't sell at any level. And I think we've gotten there. Another reason is selling to generate funds to pay taxes. So the IRS, is really kind of becoming more strict about collecting taxes on cryptocurrency profits. They first forced Coinbase to turn over a lot of records, right. And there's just an increased spotlight on it. So I think a lot of investors, maybe for the first time, are paying taxes on their crypto profits, and in order to raise the funds to pay those taxes, which are substantial. I mean, a lot of people became millionaires in a year by investing in this market. So they have to sell a portion of those funds in order to pay the tax man. So that's created selling pressure. As well, we saw the Mt. Gox trustee selling 500 million worth in a 2-month period, and not only just the selling pressure from the sheer amount that he was selling, which in the grand scheme of things probably isn't that much, but he did it in the open markets on popular exchanges where you could see the sell orders come up in the order books. And that also creates a lot of selling pressure and negative sentiment. Of course, if you're considering buying or selling and you see these huge orders in there by people looking to sell, that sort of shifts everybody's mindset about it. So I think those were two of the key factors. And of course, there's ongoing regulatory threats by governments coming out against it. And we've seen the banks banning people from doing deposits and withdrawals to popular exchanges, and the credit card companies as well, not allowing their credit cards to be used for crypto purchases, which I find really telling, because, and another thing that's really telling is in their annual reports, Bank of America, Citibank both admitted that cryptocurrency and blockchain tech are threats to their very business model. I mean, it makes it less necessary to use the legacy banking system. And to me, I think that's a great thing. So it's increasing freedom in the world and financial prosperity in a lot of ways. So all of those things combined have made the price drop and correct to where it is. And again, I think this is probably healthy in terms of the longer term sustainability of the bull market. I remain as bullish as ever, and I try to add during dips like this. And I think we've probably seen the bottom. I can't be certain, but if we're not there yet, I think we're probably close. And there's doomsayers that say this is the end, the bull market's over, cryptocurrencies are dead. And a lot of those people, I think it's probably some sour grapes from, not getting in early and enjoying the ride up that took place over the last few years, or just not understanding the markets. But to me, it's here to stay. And even if we correct further here or consolidate for another year or two, which I don't think it'll go that long, but even if we were to, I would remain bullish, continue to hold my positions, and continue to add on the dips.
Yeah, again, I'd have to agree. Banks seem to be working in a concerted effort to make it a little bit difficult for Bitcoin. But what do you think, looking towards the future, what do you think would happen if governments came out with their own crypto? Do you think, what do you think would happen with Bitcoin then?
Yeah, I don't view it as a big threat to Bitcoin because, a government crypto is going to be centralized by its very nature. It'll probably be inflationary. So it goes against the very foundation and ethos of what cryptocurrency is and why people are attracted to it. They're attracted to it because it's decentralized and because it's the people's money. It's a free market form of money. And the government doesn't control it. So for the government or banks to come out with their own form of it, and I suspect they will. We've seen it in Venezuela already, petro-backed supposedly, although I don't know how much it actually is. Right. But anyways, I don't think they'll get a lot of traction to the point that it would detract much from the success and sustainability of Bitcoin and other major cryptocurrencies.
Okay, getting back to a point you touched on a bit earlier about sour grapes. There's been a lot of comparisons between gold and Bitcoin, and many people do think that Bitcoin will replace gold, while the gold bugs, they think it's just another tulip mania, which might be quote-unquote siphoning off investment money from precious metals. I understand that you see gold and cryptocurrencies as complementary assets. Can you share with us the reasons for your view on how they are complementary and it doesn't have to be one or the other?
Right. I've found the response and feedback from my subscribers to be very interesting on this topic because you have a handful of them that are very hostile towards it and that wish that I didn't cover it in the newsletter or spend my time and resources on it. And I suppose most of them probably didn't buy when we recommended it at much lower prices. And then it tends to be the younger crowd in general that is more interested and excited and optimistic about the prospects. But
Yes.
gold and silver, particularly the physical metals, it's in your hand. Nobody can take it away. You can touch it. It has tangible value. It can be used in multiple applications, industrial and durability, fungibility. It's got a lot of great characteristics of money that make me want to continue holding it. And cryptocurrencies can do some things better than precious metals, such as, being able to transfer large amounts quickly. You can't
Yeah.
throw a bunch of gold in your luggage and walk onto a plane and go to another country. So not only the risk and the government confiscation and just the cost and the hassle and the time of doing it. So I think both are better forms of money than fiat, far and away, as far as I'm concerned. And then they both have advantages in different ways. So I think holding a combination of both of them is a smart move for any investor. And in particular, I think some of the gold-backed cryptos are interesting, and there are new ones coming out all the time. So then you can sort of, as long as you trust the third party and it's not fractional reserve holdings, and it's audited and you could have access to the bullion at any point. I think it's very interesting, some of the gold-backed cryptos that are coming out, because that sort of gives you the advantages of both forms of money without the disadvantages of fiat.
Yeah, we'd coming from the precious metals industry, we've seen people sliding back and forth between Bitcoin and gold and Bitcoin, and it's interesting that they'll stay in those two. They won't come out and go back into fiat.
Right. And I agree with you that the rise of crypto has probably taken some investment funds away from the precious metals sector. I think that's probably a valid point. And maybe that's been part of the reason we haven't seen gold rise as much as we would expect, given the drop in the value of the USD index. So, eventually the new funds, I think, are going to be coming out of equity markets when we see a greater crash start to happen out of all of these bubbles are likely to burst at the same time, because they're all inflated at the same time with the same sort of means. So when those bubbles start to burst, there's not a whole lot of places you want to run to. Initially, people in a rush to liquidity will go to the dollar. And for all its weaknesses, it is still backed by the military might of the United States. I think that's its main backing that we know of. If you don't accept it or don't, follow the policies or vote the way that we want you to, or, whatever political strong arming that happens, our military just suddenly intervenes in your country. So that probably props up the value of the dollar, as well as people still buying treasuries. But that's starting to change. We've seen China this year start to sell treasuries pretty significantly. Russia has been doing over the last couple of years. So I think the appetite for U.S. debt and the faith in the U.S. dollar as world reserve currency is on the wane, and it's going to continue to decline, especially with crypto and better forms of money coming out. So I think, again, you want to kind of be ahead of this curve. Before these bubbles start to pop, you want to begin to move your funds into safe haven assets like precious metals and cryptocurrency.
Yeah. To add to that as well, since we're on the dollar, petrodollar's got some competition now with the petro yuan. How do you see this move affecting the U.S. dollar?
Yeah, it's just it's another chink in the armor. It's another cut, and eventually we will have the straw that breaks the camel's back, because there's so many flaws in the dollar. If you look at the amount of debt the U.S. government has racked up, deficits are increasing again. They went down for a number of years, but are expected to go back above $1 trillion annual deficits in the U.S. with Trump's increased government spending and tax cuts, which mostly benefit the wealthy. So all of these things combined, and there's multiple other factors, but people selling treasuries, and yeah, now you have the yuan, petrol yuan, and other factors are all going to cause the dollar to continue to slide over time. And it may reach a panic point where it's not this gradual sort of slide that we've seen, but it begins to drop rapidly. So again, I think it's important to hedge and to not have a high percentage of your assets in the dollar or dollar denominated investments.
Okay. Last question, Jason, and again, I appreciate your time. I'm going to put you on the spot a little bit here. Which
Sure.
is a better store of value, gold or Bitcoin?
Yeah, I'm not going to say one or not. I'm going to script this question like a politician might and say, again, you want to own both. They're complementary assets. I'd probably have a higher allocation to gold than Bitcoin, just given the uncertainty of the market, the volatility in the market. And it really depends on where you are on the scale of being risk adverse or not as an investor. But I probably have a higher allocation of cryptocurrencies than the average person should. I don't mind taking on that risk. And again, I'm a long-term believer in Bitcoin, but I don't intend to ever sell my precious metals. That's sort of the foundation
Right.
of all of my investments, something that I believe will continue to hold its value over time. But it is interesting, the point that people bring up that in some ways Bitcoin is potentially even more limited in quantity than gold, because according to the algorithm, and it would be very hard for this to ever be changed. You would need consensus and a majority to want to do it. And I don't think that would ever happen because it's not in the interest of people holding Bitcoin. So that will always be 21 million. And in fact, it's probably less. They say with the amount of Bitcoin that have been lost or destroyed or whatever, there's probably closer to 18 million Bitcoin in existence. And so new Bitcoin that are mined, the amount goes down every year until finally there will be no more. And it's actually already over 16 million, I believe. So 16 million out of that 21 are already in existence, and that's it. And then with gold, yes, supply is limited. Yes, it's way better than having a printing press and be able to issue as much money as you want, as central banks do. But you could have huge new discoveries under the ocean, on the ocean floor, on other planets. You know, there's theories about huge amounts of gold in the Grand Canyon. So
Is that why you moved to Arizona? You got to go and get some of that gold?
no, I don't think I'm going to be going into the depths of the Grand Canyon searching for gold, but it's an interesting theory. I don't know if it's there, if that holds any truth at all. But I think the bigger point is certainly more gold can be discovered over time, and huge amounts all of a sudden could be discovered. Whereas that's never really going to happen with Bitcoin. It's a predictable timeline of how much new Bitcoin is being produced until it hits a hard limit. So again, both assets have their strengths and their weaknesses. You want to hold them together, in my view, and they're both superior to any other form of money. And to me, both very undervalued relative to other asset classes where you could choose to put your funds right now.
Right. Okay, Jason, before we wrap up, could you tell us more about the work that you do on Gold Stock Bull and the Contrarian Report?
Sure. I've been publishing the newsletter for about 12 years now. So the newsletter comes out once a month. It's usually around 15 pages. And we cover everything that's going on in the markets from a macro perspective, what's going on with stocks, employment, manufacturing, what kind of political events are driving the markets, are creating opportunities or threats in the markets. And then, of course, we cover precious metals, cryptocurrencies, cannabis stocks, which is another area where I think there's very strong growth potential.
Yes.
And so we're invested in a number of Canadian cannabis producers. And then we, in addition to the monthly newsletter, we send out alerts about once a week, just covering what's going on in the markets, any opportunities that we see, buy and sell, If we're buying or selling, we'll send an alert saying what we're buying or selling and the rationale behind that trade. And then we include a model portfolio that's updated in real time that has all of our cryptocurrencies as well as mining stock positions. And, we have a lithium miner, a cobalt miner. So we look at just strategic areas where I think the supply-demand fundamentals are favorable. And so we put all that into a service, and you can learn more about it at goldstockbull, goldstockbull.com. And you can sign up right now for a 3-month trial of the service at just $95.
Wow, Jason, that's quite a bit of information in a short time, but we appreciate it, and we appreciate you coming on the show. It was a pleasure to have picked your brain a bit regarding precious metals and cryptocurrencies, and we thank you very much and hope to do this again soon, Jason.
Sounds good. Thank you.
All right. Thank you also, Jason. That was Jason Hamlin from goldstockbull.com with his views on gold, silver, and cryptocurrencies. To find out more about Jason's work, please visit his website, goldstockbull.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content.